welcome to my YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career ambassador. This video is relevant if you're studying financial accounting as part of your level 3 preparing financial statement unit. And in this video, I will be covering task 2 of the AAT practice assessment, which is in relation to the year-end adjustments. And your task 2 is going to be from the year-end adjustments. The year-end adjustment includes things like any adjustment in the closing inventory, for example, any adjustment in relation to accruals and prepayments, for example, any adjustment in relation to allowance for doubtful receivables. So things like that, including any correction of errors, for example. So without further ado, I'm just going to take you to the AAT Practice Assessment 1 and Task 2. Okay, so just give me a second, please, for that. Okay, so Task 2, there we go. So this task is about recording period end adjustment. They normally mention that in the beginning of the task. And if I just give you a little overview of this task, as you can see that this is in relation to the inventory, which of the costs should not be included as part of the inventories. And then the effect of not recording something in relation to the accruals and prepayment. So technically that's an error, so correction of error. In other words, the effect of that error on different things. And this one is in relation to accruals and prepayment, so which is in relation to an income account. It can be in relation to an expense account as well. And then this one, the final one, which is in relation to the allowance for doubtful receivables. So let's start with the first one. So Alice wants a business which provides cakes for corporate clients. You are preparing her year-end accounts for the year ended 31st of March 2018. Alice is registered for VAT. Identify which one of the following should not be included in the evaluation of inventory at cost. Now, what we normally include as part of the inventory cost is directly attributable cost. And what is directly attributable cost? Meaning that directly involved in production of the cost, production of the inventories, or bringing the inventory to resaleable, ready to sell, in other words, or finished goods. So anything which is not directly involved in the production, then it would not be included. But in other words, all direct cost will be included, indirect cost will not be included. And direct cost, if you have studied management accounting, remember direct cost is a cost which can be traced in a unit of output. And or direct cost is a cost which can be identified within each unit of output. So for example, direct material can be identified within each unit of output, that how much it has costed us to produce one unit, how much material. So similarly, that the people who are working to converting raw material into finished goods, again, those their wages and salaries is a direct cost because they are directly involved in that. So let's tackle this. Identify which one of the following should not be included in the evaluation of inventory. A cost of purchase of the ingredients, that's direct material, that's direct cost, will be included, of course. Carriage inward on the ingredients, again, that's directly attributable to those inventories. So that can be traced within a unit of output as well in that sense. So that's directly bringing them into the resale situation, in other words. So again, this is in delivery cost, carriage inward. So this is a direct cost as well, then which will be included in there. Labor cost to cook the cake, against this is the wages and salaries of the people who are actually directly involved in production of that. So therefore, that will be included. Refrigeration cost for the storage of the cakes, that's not related to the production. That's just the storage. So that's kind of, after the production process, and that's indirect cost in that sense. So this should not be included as part of the value of the inventory. The next one, which is an accrual, should have been made for rent, which is not being made. So what is the effect of that? That's what they're asking you. Now, first of all, just think about this, that when we record an accrual of expense, what is debit and what is credit? So when we record accrual of expense, rent, it will be in this case. So expense is debit, and then accrued expense will be credit. So in other words, the rent as an expense in your statement of profit and loss, debit, and accrued expense, remember, that's your liability. That's in statement of financial position, credit. So they're asking that if someone has not done that, what will be the effect on these things? First of all, assets. Now you can see that it's got nothing to do with asset in that sense, because what they should have recorded is rent. So this accrued rent as part of the rent, and then accrued rent as a liability. So it's got nothing to do with asset. Therefore, no effect. And then in terms of the profit, now, if you think about it, that if you understated the expense, in other words, that you have not recorded the expense, accrued rent, then your expenses are understated. And if your expenses are understated, your profit has overstated, because remember, profit is equal to incomes minus expenses. So if you recorded less expenses, that means that you have overstated, exaggerated the profit in that sense. So this is profit is overstated in this situation. Okay, let's move on to the next one. Now, in relation to the accruals and prepayments, they normally give you either an income account or an expense account. What you need to understand, first of all, is that what type of account it is. It's an income account. And remember, there was the double entry rules in relation to the income account, which is increase in income credit and decrease in income debit. So first of all, reversal entry we will need to make. Then we need to record the cash book, how much money we received, and then we need to make an adjustment at the year end as well. So as you can see that the year end we are working is 31st of March 2018. So the ending date. So on 31st of March 2017, this is the last year closing balance, which will become, remember, opening balance for this year. An entry of 1,000 was made into the rental income account in relation to accrued income. Now, accrued income, remember that we have recorded it on the credit side last year because it was related to that year, even though that we have not received or we had not received the money as yet. So the reversal of that will be, it will be on the debit side. Why? Because it's not related to this year. Remember, it was related to last year and we have recorded it on the credit side. So therefore, reversal of this is going to be on debit side. So accrued income, as you can see, which is 1,000. Then cash book entries for the current year relating to rental income are 12,000, and this will go in your credit side, which is 12,000. But remember, in relation to this, that there will be an adjustment. So as they told us here, this included a receipt of 4,500, which related to the 6 months ended 31st of July 2018. So again, this is our year end is, remember, 31st of March 2018, and this is until 31st of July 2018. So if you think about it, April, May, June, July, those 4 months are in relation to next year. So we received money in advance. In other words, that this is our prepaid income. So that 4 month of income is not related to this year. So it should be reduced. It should be decreased from this year. So remember, decrease in income is debit. So this will be your prepaid income. But 4,500, this is for the entire 6 months. So 4,500, if you divide it by 6, that gives you monthly income, and times by 4. Remember, April, May, June, July. So it gives you 3,000. And then we need to calculate the statement of profit and loss figure. A statement of profit and loss figure will go on the credit side. Sorry, we'll go on the debit side, in other words, the smaller side. So as you can see, yeah, which is statement of profit and loss, and the amount for that is 8,000. Last part of this question, but not the least, which is the allowance for doubtful receivables. Now, this question is a little interesting one because I didn't come across as part of the Osborne books or Kaplan or PPP. So this is in relation to specific allowance as well as general allowance, because normally what I have seen was like more about general allowance. So first of all, what's the difference between these two? Now, specific allowance, remember that we create, or the business create against a specific balance from a specific customer, maybe. So, for example, if we came to know that this customer is struggling to pay or struggling with their cash flows or struggling with their financials at the moment, and then we want to create that because it's likely that we are not going to get our money from that customer. Whereas general allowance is an allowance that we say that generally we don't receive 2% of our receivables or 3% of our receivables. So when they give you these two, for the specific allowance, the straight way you will be just making an entry, which will be debit will be allowance for doubtful receivable adjustment, and credit will be allowance for receivable. Okay, so remember the one goes adjustment goes in your statement of profit and loss, and the normal allowance for receivable that goes on the statement of financial position. In other words, that we reduce the amount from the receivables. So as you can see in this situation, that there are two allowances they have given us. So I'm just going to tackle the first one, which is the specific, the easy one first, and then the second one I will explain it to you how to tackle it. So as you can see at the year end, at the end of the year, Alice asks you to make an allowance for a specific receivable of 2380. So the double entry for this will be allowance for doubtful receivable adjustment, debit, and then allowance for doubtful receivable credit. So which is amount they've given you already, which is 2380, and again 2380. Now it's very important that you look at the instructions in relation to decimal places and all of that. As you can see, they told us enter your answer to two decimal places. So it should be then 2380.00. And similarly here, 2380.00. Now, the second one here, they've given you the allowance for doubtful receivable in the beginning of the year, but we need to determine at the end of the year. So then we will find out whether it has increased or decreased, and then we will make entry accordingly. Now, how you will calculate it? So they've given you the receivable balance, which is 27,468. Now, remember the specific allowance, that balance is part of this. So we need to deduct that first. So 27,468 minus 2380, that gives you basically 25,088. So the percentage at the end of the year will be based on that. So at the end of the year, they've given us the percentage, which is 2%. So 2% of 25,088, which gives you 501.76. So you can clearly see that it has decreased, because it decreased from 558.27 to 501.76. So what's the decrease? What's the amount then? So you just 558.27 minus 501.76. Which gives you basically 56.51. So what I want you to do is, if you record the entry here, first of all, the amounts here, and then I will show you and explain it to you that what will be debit and what will be credit. Now, this clearly has, remember, the decrease in allowance, and decrease in allowance, statement of profit and loss, whatever adjustment we make, it will be credit in there. And what will be debit then? Debit will be allowance for receivable, allowance for doubtful receivable. So this will be debit, and then the adjustment will be credit, as you can see. Okay. So I hope that this was helpful. I do apologize As you can see that I'm under the weather at the moment, but I just thought, I still continue making videos because otherwise I just, kind of delaying it, and sometimes it doesn't help for students, who have, for example, lined up an exam, and this might be helpful for them. So thank you very much for listening, and I will be back with another video. It's not a game, it's a rage.